start by looking at something sentimental. Michael Joseph has become synonymous with Safaricom. He has hinted that he could be leaving by 2010. Some people have compared the way he leads Safaricom to the way Virgin Atlantic is led by Sir Richard Branson. What do you think will happen to the brand after he leaves, and what's the current sentiment surrounding that information?
Well, I would have to say I'd agree with you that he's been synonymous with Safaricom, and also he's been behind in terms of turning around the revenue, in terms of the profit for the company, and also bringing about new ideas. But then again, you also have to look at the long-term approach. The business still needs to grow. Yes, he'll step down, but I'm sure there's an able-bodied management that has been set in place, that they are competent managers and they'll be able to pick out somebody to run the show. Or more or less, he'd still remain on board, but in an advisory capacity, or more or less as a consultant, albeit being maybe chairman of the board or something like that, but in a more consultative type of facility. But also going forward, if you look at Safaricom, you also have to look at their way forward, that there's also need for change in any organization. If you look at, for example, if you look at also like Microsoft, you find that Bill Gates ended up stepping down and having somebody else.
But how about the investor sentiment? We know how much Safaricom is almost a patriotic stock, and how people view the fact that Michael Joseph did turn around the company, just as you have said. What are you telling investors, or what do you read out of the investor mood at this time?
Well, I'd give credit to the investor in that slowly by slowly they're becoming more savvy and more aware. Because if you look at the bottom line, or in terms of the business Safaricom is in, it's actually now making more in terms of data. And going forward in the next couple of years, it will still be as profitable as it was in the past. So at the end of the day, it won't really matter who's at the helm, so long as the business model and the idea continues. And an investor will look at that. They look at the earnings per share, they'll be able to look at the dividend and in terms of growth, and that will make them continue investing in the company.
Let's look at some other high-ranking market news, and that's the face-off between Citadel and TransCentury. They had a meeting in London today to try and iron out differences regarding the shareholding in Rift Valley Railways. What's the likely outcome of the meeting?
Well, I would hope they come to an agreement, because if you look at it, these are two people with equal strengths. One, if you look at Citadel in terms of financing, it comes with a financial muscle. When you look at TransCentury, it comes with what is called local knowledge. East African based, is also ventured into other businesses, like you look at the East Africa cables and the likes, and you notice the profitability. So I would look at it from a point of view that they'll actually have to come to a truce and agree to disagree for the benefit of actually the business. Because if you look at the rail RVR, when Cheltenham was there's not much that has gone on. In fact, the railway line has actually become more or less, it's almost close to becoming obsolete in this day and age when we're actually growing the market. The port of Mombasa is working 24 hours. So you need a railway line that is functioning, because if you don't have a railway line that is functioning, then it means there'll be a lot of wear and tear on the infrastructure, which is the roads, the public roads.
Now, we hosted Gashal Kuna, that's the CEO of TransCentury, here in studio about 2 weeks ago, and he was very clear that TransCentury is on the ground. The company is well versed with East African issues and understands the dynamics of that railway, just as you have said. This is a battle of power at the end of the day. And I'm going to push it just a little bit. What would you like to see as a person who advises investors within this region and a person who's in the market?
Well, I'd say given the right, looking at the situation, it's a very profitable company if it's turned around, because in terms of return on investment. And TransCentury is looking at it from that point of view, that we've put in this much, we need to have a controlling stake. Citadel also comes on board and says, yes, we have the funds. We found, because it's lucrative, if you look at Kenya, Uganda, Tanzania, and the wider East African market, if you have a well-functioning railway line, you'll have opened up a lot of the markets. There's a wide, if you look at almost 500 million people, those are consumers, and you have a functioning railway line. I would put, not to sound biased, but I would actually give my support towards Citadel, and then have TransCentury actually look at the situation and realize that there's power in combined strengths. The two of them would actually work much better than individually.
All right, let's look at another promising counter. That's Athi River Mining. It has announced plan to sell 1.6 billion shillings, that's about $21 million, of bonds in April and May to help fund building of a new cement plant. and clinker unit in Tanzania. What term do you think they'll be looking at? If we look at the recent performance in the bond markets, they show heightened activity in long-term bonds, while the short-term bonds are beginning to lose their luster. What kind of bond do you expect them to raise?
I'd say they'll raise a 5-year bond with maybe a coupon rate of about 11%. Because looking at profitability of the cement industry, there's a very high chance of them making a lot of money. Because if you look at Tanzania, there's a very wide market in terms of construction. And when you look at it in terms of construction, you realize that cement is one of the key ingredients when you're looking at construction. 9.2% is what we are looking at in terms of growth potential in Tanzania. And that is one of the key markets that Athi River Mining is focusing on. And the plant will be put up in Dar es Salaam. Going forward, they'd raise a 5-year bond, which is more or less in line with the expansion deals, and that would also help in terms of return on investment on most investors to make it attractive. Because you look at 5 years, look at the company's business model and structure, and you realize that yes, I would gladly put my money there in terms of taking up the bond.
Now, with that expansion, especially into Tanzania, do you see a chance of cross-listing, even if it's not particularly on that bond, since it is focusing on the Tanzanian market, on their equities front?
Most likely, in the near future, you'd have cross-listing. You have the Kenya Airways cross-listed, and most likely you'd find Athi River 2 Mining cross-listed. Yeah.
As we get into next week, what are some of the top stocks that you'll be looking at?
I'd look at Mumia Sugar. Mumia Sugar for one particular reason. They've actually announced plans to expand their power generation unit in terms of the power generation unit that they've been doing. And they'll be able to supply more electricity towards 2011 to Kenya Power and Lighting. That means it will actually diversify its revenue base, not just from sugar, but also from the molasses, what else, and the ability to generate electricity, making it a self-sufficient type of organization. So I'll look at it right now as retailing between 10.25, 10.30, hovering between that range. And going forward, that would be a very lucrative stock to look into.